Good morning, everybody. It's Steve Brown from Mirae Asset Securities, Mirae Asset Live. Joining me this morning is Mr. David Harrison, partner of Mayer Brown. Mayer Brown is one of the very first international law firms to establish presence in Vietnam in the modern era in 1994, before the normalization of relations with the USA. David, thank you for joining us this morning.
Thank you, Stephen. Pleasure to be here.
Thank you. So, David, through the course of the conversation today, we'll talk about the Vietnamese legal system, how Mayer Brown finds its place in that, how you've seen the transition since your time being here in Mayer Brown's, of the development of the capital markets in Vietnam, respecting your firm as a specialist globally in that area, and particularly here in Vietnam. Then we'll also have a chat about some M&A. We'll have a chat about some discussion on the new securities law that came into effect in January this year.
That's correct.
And then also on the 17th of May, the Circular 3, which is a very keen interest to a lot of our investors in the banking stocks of Vietnam, because it is very supportive of both the banks and also their customers impacted by COVID-19.
Yes.
So, to kick things off with, Mayer Brown's been here since 1994, and I've known you for a long time, since about 2013. Highly respected individual with the US State Department, and then you transitioned into law. When you got here, the clients of Mayer Brown then to where you get your clients typically today, if you'd like to start that off.
Thanks, Stephen, and appreciate the kind introduction. So yes, I started practicing law in Vietnam in 2007. As you mentioned, I previously worked as a diplomat in Ho Chi Minh City from 2003 to 2005. And I think where we see the client base develop and change to some extent in Vietnam is that we now act for many more Vietnamese companies. Previously, and even today, the lion's share of our clients are offshore investors, and that includes development finance institutions, includes commercial banks, investment banks, and PE houses. However, increasingly, and this is, as you say, largely driven by the strength of our capital markets offering, we work with Vietnamese issuers. And that's really one of the key changes that I've noticed in the client base since 2007, is that now we see the large corporates such as the Novolands, the Vin Groups, the Massons working with international counsel. We've done quite a lot with Novoland over the years. We've also worked with portfolio companies of PE companies, but with the Vietnamese staff, Vietnamese management. And so that's one of the areas I would highlight as the shift to working more with Vietnamese clients, in particular in the capital market space, helping guide them through the process, which can often be intimidating, of navigating US securities laws and other considerations.
So you're basically pinpointing the fact that there's been an increasing sophistication of the companies in Vietnam, going from either private ownership, unlisted, or state-owned enterprise structure, unlisted to listed, to becoming internationally investable, to having international investors, to having development finance organizations come in and help fund them, such as the ADB or the World Bank's associated IFC.
The bilaterals, FMO, DUG, very active as well.
Exactly. So basically now, the next focus we've seen in that developmental story is some Vietnamese companies doing issuances, bond offerings on the Singapore Stock Exchange, and then even talk now of doing either a SPAC or a listing itself on one of the Wall Street exchanges like the New York Stock Exchange. So right, up to basically world-class level now. So in relation to that, the US legal system and the Vietnamese legal system, the overlays or restrictions at the moment for such as the potential for a Vietnamese company to list in the USA, easy, or is it restrictive, particularly if it's a stock that's got foreign ownership limitation, such as the banking sector? Could you talk us through how you see the pros and cons of that approach for a Vietnamese company as opposed to just building out its operations here in Vietnam or through bond issuances, say, in Singapore?
Sure, Steve. It's quite a lot to cover there, so let me maybe break it into smaller parts. Let me start with the benefits and the drawbacks of an equity offering. And you'll see for bonds, the issues are largely similar, but there are a few subtle points here and there that are a bit different. But why don't we start with equity? Clearly, the key advantage to an offshore equity listing for a Vietnamese company is simply the breadth of the market into which they can sell. And this really goes to the liquidity of key stock exchanges globally. So if you look at the 5 largest stock exchanges in the world, the first 2 are, by a wide margin, the New York Stock Exchange and the NASDAQ, which collectively have over $50 trillion of market cap. And then interestingly, if you look at the next 3, you'll see that the next 3 are all Asian-based: Shanghai, Hong Kong, and Tokyo. And then you have rising stars such as the Korean Exchange and the Taiwanese Exchange, which all have over $1 trillion in market cap, and Singapore, which is coming quite close. So liquidity base is a key benefit for an international equity offering. In addition to an initial offering, you can then have add-ons. So simply the level of capital that a Vietnamese issuer can raise through an international offering is significantly larger than what can be done onshore, given that the market cap of the Vietnam Stock Exchange is around $200 billion, depending on how you look at it. So it's liquidity, number one. I think 2 other more intangible benefits, if I can use that term, would be the prestige of an offshore listing. The fact that you could have a VNG or a VinFast listed in New York, I think would do not just a lot for those particular companies, but really for Vietnam as a whole in terms of international recognition. And then a related intangible, which is related to prestige, but perhaps a bit more specific to the business, would be brand recognition. And in that, you would have, for example, a fintech company benefiting from an increased customer base, people recognizing who they are, the way, let's say, an Alibaba has benefited from its New York Stock Exchange listing. And then you also have export-driven Vietnamese companies that would have increased brand recognition, essentially free marketing. So I think those are the key advantages. If we look at disadvantages, and I don't think disadvantages is perhaps the right word to use, we're looking at challenges. Certainly from a legal standpoint, there are a number to highlight. The first being that the State Securities Commission approval is required in Vietnam. The State Securities Commission will require a dual listing. So that would require a listing in Vietnam as well as the listing overseas. This creates potential issues in terms of currency and price arbitrage, given the different markets, the different trading hours, which will be something that the issuers will need to work through. It's not something that's immanageable or unmanageable, but something that needs to be considered. From a legal perspective, though, I think the biggest challenge is simply the process of going through an international offering. The international offering process is challenging. And if we look at the way a global offering will typically be structured, you'll have the issuer, which will sell securities to a number of banks. These will be large institutional banks, and this is typically done through what's called a private placement mechanism under US law, called a 4-2 placement. And then once those banks have acquired the securities, they will then resell them. And they'll either resell them to institutional buyers in the United States, called QIBs. These are usually pension funds, large institutions, or they'll be sold outside the United States in what's called Regulation S. That's the basic model.
Or Reg S.
Reg S, exactly. And one of the interesting things in this paradigm is that it used to be the case that Reg S offering documents and Rule 144A, which is the US resale, that these were distinct and they had very different provisions and different requirements, with the basic principle that the Reg S process was easier, not as stringent. And I think one of the things we see in Asia, and it's really driven by both the banks who are underwriting the deals or placement agents, and also the investors who have rigorous demands as to the criteria and the standards that are met, is that you see what's called now a super Reg S, which is essentially the Reg S legal process in that they're being sold to offshore investors, but with an offering circular that matches a bit more closely what the 144A process is. So for example, a management discussion and analysis called the MD&A section, detailed financial informations. One of the challenges also in terms of the legal process for a listing, whether it's debt or equity, is the preparation of financial statements under either IFRS or, for the case of a US listing, under US GAAP. As you know, of course, the Vietnamese companies use VAS for their reporting, and there are a number of critical differences between VAS and IFRS on the one hand, and VAS and US GAAP. So all of this needs to be worked through, and I think that's why, to date, we've generally seen a lot more activity and success, certainly in the bond market. We don't have an example to date of a Vietnamese company actually going through an equity listing either in the United States or on one of the large Asian exchanges. And hopefully that will change. We really would like to see that, and that would really be the culmination of a lot of the growth of the Vietnam securities markets.
I think the first modern company in the TMT space to contemplate a NASDAQ or a Wall Street listing was VNG. And I think that was discussed a few years ago now, back about 2016 or so. Still nothing just yet. And then we had, since 2019, some of the Vingroup companies.
That's correct. VinFast, for example.
Contemplate doing that. So it'll be interesting to see how that develops this year. Now, if we have a chat about the local bond market, the thing that I've noticed being in Vietnam, particularly the Credit Guarantee and Investment Facility, or CGIF, which is a trust fund set up by the Asian Development Bank, or ADB, to support the development of the local Vietnamese bond market. The way that works, as you know, is the issuer, whether it be MASconnect or whether it be any other corporation like Mirae in more recent times, gets the benefit of the credit rating of the ADB and the CGIF itself.
Correct.
So makes it far more attractive for an international institutional investor, and also from a local point of view as well. The first company that CGIF worked with back in 2014, MASconnect. They took around about $100 million US deal, 10-year bond, and with the credit rating. Then in more recent times, we had Mirae do theirs. With the CGIF, it's proven to be incredibly popular from the counterparties that I speak with. But the only thing I find with that is that they tend to have a bit of a cap on their capacity to extend their credit facility to companies. You know, so what we have come across in recent times post that is, you've mentioned international markets can also pick up the slack there, like Novaland when it's been doing its multi-$100 million bond issuances on the Singapore exchange, or the Vingroup itself. You know, so I think it's just a sign of maturity of the Vietnamese market in general. That leads us on to the next question. Where do you see the, we'll go into the maturity of, say now, the M&A space, because you're a specialist in that area as well. Where the sectors that I've seen a lot of appetite for, the consumer story, the energy story, ports and logistics, but there's a little bit of an investment impediment to the last one. It's easier to get into the retail consumer space. And if we have a look back in 2016, we had $1 billion US deal there when the French sold their Big C supermarket chain to Central Group of Thailand.
That's right.
Yeah. And do you see moving forward, any particular areas that foreign institutional investors might want to start to just put on their radar to have a contemplation of, that you might think there could be some M&A spaces, like first of all the sectors, and then we might talk about a couple of the VN30 constituents?
Sure, Steve. So I think from what we see in terms of interest and opportunities for foreign investors, certainly financial institutions remain critical, the banking sector, energy in particular, given that you now have a number of projects that had been stalled for a while, which seem to be on the right track, in particular with respect to LNG and LNG to power. We see a lot of interest in that space. Logistics you mentioned, and we do see quite a number of transactions in the logistics space. Just a note on logistics though, logistics tends to be one of the, in addition to banks, one of the few remaining areas in Vietnamese law where there generally are ownership caps with respect to the proportion of a company that a foreign investor can own. So for example, container handling is capped at 50%. And that, I think, has somewhat of a restrictive factor in terms of the amount of foreign investment you can see. Also, going back to your question before, foreign ownership levels are very important considerations for overseas listing also. So a Vietnamese company will need to ensure whether that its foreign ownership is respected with respect to an equity offering. So if, for example, it were a bank, then the equity would need to be limited to 30% foreign ownership in total. The same for other businesses, which may be at 49% or 50%, depending on their nature. So foreign ownership restrictions, although largely phased out through the WTO integration process, still need to be considered. And then, as you say, consumer products, I think, in general, are still very much a driving factor in Vietnam. Vietnam is still not as young as it used to be, but still a very young country by international standards, with a growing middle class. And so I think we see energy, financial services, and consumer as the three driving forces in terms of M&A activity.
You sound a little bit like Dominic Scriven. He's got like the consumer story and the other sectors that you've noted, the financial sector, the fintech, and then also he's quite keen on the real estate scene that we haven't discussed yet. But what we will discuss now is the moving forward, the securities law, because January 1 this year it became effective. If I had to nominate, say, the top 3 or 5 issues that a foreign institutional investor ought to be aware of, what would you say they are?
We'll probably go for 3 because 5 will test my memory too much and take too long. So let's go for 3. I think one key change is the definition of a public company itself. So for the first time, Vietnam has now introduced a shareholding spread as a requirement for a public company, which requires at least 100 investors that are not major shareholders holding at least 10% of the shares. So I think raising the bar to become a public company is important because that will affect investors that are currently invested in public companies, which may no longer be public companies under the new securities law. As you know, there are very strong tax benefits to exiting as a public company as opposed to a private company in terms of how foreign investors are taxed. So that's one very important point to the extent that investors are in public companies now and maybe looking to sell their shares. Another factor is the restructuring of the private placement mechanism. So, and this is a positive step, I think. This goes to Vietnam looking to protect individual investors and ensure that they are aware of the risks that are being taken, and that is the private placements are now limited to either strategic investors or professional securities investors. So investors that don't fit into either one of those categories can no longer participate in a private placement. And you may say, well, if you're an international investor with $100 million to invest, well, then why does that matter? And it does matter, actually, because the current drafting of the law, and in many cases in Vietnam, as you know, Steve, the devil is in the details. It may be the case that, let's say, PE funds which set up subsidiaries, these subsidiaries may technically not be professional securities investors until they're funded. So there's a bit of a chicken and the egg issue, and that needs to be worked through carefully and close consultation with the issuer. And then, as you know, the stock markets are now merged as well into a single stock market. And I think that's a very positive factor as well going forward, because it increases the ability of the stock market to play the policeman role a bit for the securities markets generally to function the way they are meant to be in terms of ensuring disclosures are made, ensuring that issuers are fulfilling their obligations to their shareholders and to the capital markets as a whole. So I think the securities law, while like every piece of legislation in Vietnam, takes some time to fully understand and implement, given that implementing decrees and circulars and notices are always required. From our perspective, we see this as a positive development and an example of moving forward with positive legislation.
Okay. And you were talking before about private placements. One thing that's come across my desk increasingly when we're having discussions with companies contemplating a private placement, if they're in an FOL restricted or foreign ownership limit restricted area, there's an ability still, if they've got room, foreign room, to offer foreign shares. Now, in the past, when I first started working in the capital markets in Vietnam, there used to be a 12-month lockup.
Right.
My understanding with the new securities law, if you're a qualified professional or sophisticated investor of foreign status, you can still sell within that 12 months, provided it's to a like counterparty.
Correct. That's correct.
So
you can sell to another professional securities investor.
Sure.
Right.
So that makes it, from my clients' comments and feedback, a far more attractive proposition, because in the past it was pretty well a vanilla 12-month lockup. You can't do anything. We'll see you in 12 months and 1 day's time if you want to get out, you know. And whereas now, we just have to find a like foreign investor who may wish to take up a current investor's position that they'd like to take profit on or exit.
I think that's right, Steve. I think that provision, to be honest, I think that was always the intent under the securities law, to allow trades between professional securities investors within a lockup. But I think in practice that didn't actually happen, and I think the view generally was that it's not particularly clear, and the lockup was applied more rigorously. So I think again this goes to the point that I made earlier, that this is, if you're a big boy, if you're able to trade at a certain level, then you can assume certain risk. You can take on that risk. Whereas individuals or smaller corporate investors that may not have the level of sophistication are being more protected by the mechanism, so they can't participate in private placements. They have to buy shares through more customary ways, either secondary or in a public offering. So I think all of this is designed to protect smaller investors, but also recognize that there are professional investors in Vietnam and that they can essentially go about their business with limited restrictions.
Yeah, I think it's, I think in whole and in the sum of many of its respective parts, it's a great thing to see the new securities law. There are far more investable opportunities through private placements.
Exactly.
A lot of fund managers were hitting a bit of a hurdle. They couldn't get it through compliance if they were going to be locked up for a year, whereas now that's effectively one of the things that they can put to bed and not have to worry too much about when they're contemplating getting the investment committee approval and so on to have a look at this in Vietnam. Now, comments on Circular 3, effective May 17. That is to help both the banks and also their underlying clients in relation to their potential problems with COVID-19, non-performing loans. India's passed something somewhat similar, and a few other countries around the place. In Asia, I've noticed. Again, I think this is a very credible thing for the government to put through, and the State Bank of Vietnam has been on the front foot with this. Do you have any comments on that?
I completely agree, Steve. I think Vietnam has done a great job recently with the banking sector more generally. As you know, Vietnamese banks are now required to be Basel II compliant as of January 1st, 2020. The circular that implements that, Circular 41, I think It's probably been amended more than almost any legal document in Vietnamese history. And it was announced 3 or 4 years before being effective, simply because there was an awareness that this actually would require quite an effort for the banks in close coordination with the State Bank of Vietnam. So from our perspective, we see Circular 3 as being, again, another exercise of responsible leadership by the State Bank in terms of working with the local banks and ensuring that their NPLs and their prudential ratios will be taken into account, and that COVID will be taken into account in terms of how that may impact their business. So I think without deviating from the fundamental goal, which is to have rigorous caps on credit growth and to manage the banks in a way that they are ready for Basel III shortly, it seems to us that Circular 3 is a bit of reason, though, in that process, and recognizing that given the current climate with COVID, that there may be some measures that are required to at least alleviate some of these requirements, reduce the burden on a temporary basis, without giving up and without sidetracking from the long-term goal, which is Basel III.
On Basel III, when do you think it might start to be entertained as being able to be implemented by some of the banks out there?
Probably need a crystal ball for that, but I think some of the banks are well on their way to Basel III compliance, but that's something that probably needs a specialist to actually go in and analyze. But I think some of the banks seem to be well on their way to Basel III.
Sure, yeah. We've had a discussion with some of the banks recently on Mirae Asset Live. We had one of the BOD members from OCB, and they were in the first batch of banks to be
qualified.
Basel II, exactly. And it's good to see that a Tier 2 bank, one of the leaders there, alongside VIB as well. So the whole banking sector, whether it be Tier 1 or Tier 2 and others now, they all seem to be very cognizant of the fact that if you want to, welcome additional shareholders, strategic shareholders, increase your chartered capital, become a very sophisticated and seen as an internationally investable bank, you do need to be proactive about the way that you manage your internal procedures.
Certainly.
Talking about successes again now on some of the local big constituents of the VN30. In the last 12 months, we had Vin Group announced that they were doing their Singapore Stock Exchange listed
That's
bond.
Right, convertible bond. Or?
Yeah. So the VIC or Vin Group issuer, and it'll convert into Vin Homes stock at the end of the day. The processes of those, they seem to be becoming increasingly popular. We're getting quite a lot of companies who are looking at doing major multi-$100 million deals like this. BIM as well, recently, they've announced to do something on the SGX. Do you see the SGX as being one of the prime places? Because the New York Stock Exchange story for a SPAC or something, to me, seems to be just a little bit further down the road to the right here, right now. Ability and ease of access and investor appetite to see good quality Vietnamese companies contemplate an SGX bond offering. The only other thing I think that's left on the table for us to talk about is, do you think you'll get foreign companies wanting to list in Vietnam?
So let me take your first question, which goes to the Singapore Stock Exchange. So I think if we look at equity and bonds a bit separately, equity, Singapore is a player, certainly with a high market cap, but I think certainly the liquidity of some of the other exchanges currently is a bit deeper, and that's why if you look at the announcements for equity listings made by Vietnamese companies, so VNG and VinFast, to use two examples, they were focused on the New York market. But certainly for bonds, it's a relatively well-trodden path. The success of Vietnamese issuers on the Singapore bond market and listing their bonds. And I think there are a number of reasons for that. I think certainly the geographic proximity of Vietnam and Singapore is important in terms of being able to travel back and forth to meet regulators, to establish a relationship also between the Vietnam stock index and the Vietnam stock market and the Singapore stock market. I think that's very important in terms of having that cooperation. And a lot of investors, when they look at Southeast Asia, they'll look at Singapore as a hub. And so investing in Singapore by buying bonds issued by a Vietnamese issuer is exactly what they're looking for, essentially one-stop shopping for Southeast Asia. So I think in terms of geography, in terms of ability to coordinate, and the way that international investors have essentially looked to Singapore as a hub for the region, Vietnam, Indonesia, Malaysia, all of that makes Singapore the perfect place for a bond offering, and Singapore has really done a great job of welcoming Vietnamese issuers and developing that market. I'd say equity, simply because there's not as much liquidity in Singapore as there is in some of the other exchanges, and that may well be a reason why Vietnamese issuers have not done equity offerings today, but perhaps they would prefer to do it in Singapore for the reasons I mentioned, and New York is still a bit too far, and there's a bit of a gap there. So for your second question, for foreign investors listing in Vietnam, I think the first step is for FDI companies in Vietnam to be able to list. And as you know, that's another challenge largely driven by the ownership restrictions. And FDI companies with ownership restrictions will need to find creative ways to manage that. It's the same exact issue as issuing overseas, an equity issuance overseas, in that if you have a business that has certain business lines that are restricted, so perhaps distribution or certain retailing activities which are difficult to conduct as a foreign invested business, one option would be to spin those out, spin them off into subsidiaries, and then you have the core business, go ahead and list. But again, it depends on whether that's economically viable, right? I mean, if you're a distribution company and you need to remove the distribution line, but probably not a lot of takers for the offering. So that needs to be analyzed very carefully. And then the other option, which is of course quite risky, but we receive inquiries all the time on, is nominee structures or variable interest structures, as they're referred to in China. And that, of course, in the listing context is quite challenging, because investors are being asked essentially to invest in a company where some of the key rights may be linked to contractual arrangements rather than direct ownership of a subsidiary or affiliate. So I think all of these points need to be addressed. I would say the first goal should be to find a way to facilitate FDI listings, and then we can talk about foreign companies listing in Vietnam.
There's a lot of FDI here too, and one of the things I've noted is the increasing communication we're getting from sophisticated FDI operators here who are contemplating making available the companies that they've got going, maybe so they can withdraw some capital or welcome new shareholders as well. When you were talking about restricted areas, how they might spin one off to make it a more doable activity. Some of the companies that are listed that have restricted areas, I've noted, they've also been restructuring. Re is a case example. They've got a few restricted foreign ownership limit areas, right, real estate, and so on. So I think everyone can kind of see where they want to go, and they're all, starting to restructure their businesses, whether they're listed or even if they're FDI players. So I think now that we've had the new securities law come in, we'll probably also start to see quite a bit of serious discussion about, how do we welcome this mass of FDI activity going on here, because it would dramatically increase the market capitalization of the exchanges, and also the foreign interest. If you could have, the FDI players come from Korea, from Japan, from Singapore, Taiwan, there would naturally there also be FII interest to buy into the equity positions of those listed companies if they could be listed on the exchanges here. So I think we'll probably get to see that, and probably get to see a firm like yours get actively involved and help make a new law like that effective and achievable for the market. Now, just to wrap things up with, when we look at things such as companies which have had some recent changes to their foreign ownership limit. You've had recently VP Bank announce that they're reducing from 30% to 15% so they can look at welcoming a new strategic investor. That's kind of one of the recent interesting things that I've seen, because most of the banks, most of the foreign investors want to see it go from 30 to 40 to 49, but they've gone kind of in the reverse from 30 to 15. I can understand the rationale there, because they're probably thinking the incumbent shareholders may or may not be exactly the ones that they would find as their preferred strategic partner to help drive the business, like OCB recently with Azora Bank. Your thoughts on the reverse there, you know, as opposed to 30 to 49, the 30 to 15 phenomenon?
Well, I think you put your finger on it, Steve. This is clearly a mechanism where you're essentially reserving foreign room for a potential strategic investor to come in. And I think that's understandable from the issuer's perspective, because foreign room is so valuable for a bank in particular, given the hard 30% cap. I mean, that being said, we do know of certain banks that are beyond 30% and even 100% for the distressed banks, which are just a handful. But the 30% cap applies to most of the healthy banks. And the bank concern is that the foreign room could be taken up by a number of individual foreign investors or smaller corporate investors, and that this would ultimately fill up the 30% without the bank having that key strategic partner that it would want to work with and go forward. So for a bank to take that position, I don't think is unusual. Whether the regulators will accept that going forward or not, I think is an interesting view. I think certainly there's always an active dialogue between the state bank and the local banks in terms of how they approach the cap and how they approach their business. But certainly for the bank perspective, from the bank perspective, I think it's understandable as to why they would want to take that approach. That being said, the 30% cap is an aspect of investing in Vietnam which is challenging for foreign investors. I think you'd see a lot more M&A activity in the banking sector if you were to have a higher cap or no cap at all. But I think given the current legal restrictions of the 30% cap, and also within that individual caps of how much even strategics can own, then Vietnamese issuers will want to ensure they have that ability and flexibility.
Okay. And SCIC, it's like the Sovereign Wealth Fund of Singapore or Australia's Future Fund. They, 31st of March, came out with the list of their updated 2021 divestments or sell downs of some of their positions within the SCIC, looking after the state capitals equities. They've got just under 160, it's about 157 enterprises within there at the minute. 88 of them they've posted up as being eligible for divestment, so it's quite a tidy sized list. And I noted Sabeco, the brewery company, is back up there as being eligible. They left out Vinamilk, which is probably understandable because it's tapered off a bit. But Sabeco, do you think we might see another big slice of that come off, and the Singapore F&N vehicle with its local partner grabbed it the last time successfully at auction and became the majority controller of it? What are your thoughts?
Well, Sabeco's always been one of the hottest topics for years. I think there was a period of time before the Thai deal where probably every month we would get a question from an investor about Sabeco, or through other partners in the firm through their relationships. And so there was always such a mysterious air about what actually would happen with Sabaco and who would buy it. So I don't have any specific information, but I certainly wouldn't be surprised if SCIC sold off more of Sabaco, because it clearly is a cash cow, and it's a great way for Vietnam to increase its foreign reserves. So from a strictly economic point of view, I think they've taken that first step, which was selling the majority stake of it. And now we'll see whether there's appetite to sell more.
And in November 2017, it spiked to over 300,000 VND a share. So they certainly have been rewarded with not only the auction sale, but also what they've still got left on the books. So they've got a tidy holding there that they could potentially offer up. So David Harrison, thank you, as always, for
Thanks very much, Steve. Pleasure to be here.
Chat. We've spoken many times together and presented Hong Kong, Singapore, and I think your counsel and insight is probably among the best of any practicing international lawyer in Vietnam. And I'm sure our clients and viewers will be more than impressed with your comments today, and grateful to hear your learned insight into Vietnam. Steve Brown from Mirae Asset Securities, Mirae Asset Live with David Harrison. Thank you.